As the war of words has raged between Iraq's central government and the Kurdistan Regional Government over the latter's right to produce and market its natural resources, at least half a dozen tankers filled with crude oil have been circling the globe in search of buyers. Joining me now is Richard Mallinson, geopolitical analyst at Energy Aspects. Thanks for joining me today. Baghdad has cut Kurdistan's budget by more than $7 billion since the start of this year. Has this really just added pressure on the region to find buyers for its crude?
Well, this is part of a very long-standing dispute that covers not only oil production and exports, but also questions of territory and broader questions about budget sharing and revenue. But I think we've seen in the last few months a real worsening of relations between Baghdad and Irbil, and that's also been seen in part in these oil tankers trying to go out and find buyers against Baghdad's wishes.
And buyers really have been put off by Baghdad. And obviously what it thinks about this. And, what actually has to happen for Kurdistan to be able to ramp up not only production, but also exports?
What they really need to do if they want to make these exports sustainable and bring them up to the levels that they need for their budget is to get some kind of compromise or agreement with Baghdad that actually takes away that opposition.
Because right now, if we look at this chart, it does show that, exports are really well below targets, aren't they?
Exactly. So even though they are managing to make the occasional sale, it's nowhere near the 400,000 barrels a day they've estimated that they need to fund the KRG budget entirely.
And until very recently, until these ISIS militants were moving at lightning speeds towards Kurdistan, the region was actually very stable. And this has been very attractive to Western companies looking to invest there. Has this also been a concern to Baghdad as well?
Absolutely. I mean, the combination of much better contract terms than Baghdad has been offering for fields elsewhere in the country and a more secure and easier investment environment in the Kurdistan region has seen an influx of companies in recent years, not just small independents, but also some of the big internationals like Total, Chevron, Exxon. And that's a concern for Baghdad because those companies are really, obviously, despite Baghdad's opposition, rating the opportunities in the KRG territories very highly.
And do you think that the formation of the new Abadi-led government will yield a breakthrough on the oil front? And if so, how long do you think it will be before we get there?
Well, I think that's the question everybody in the oil market is now trying to answer, because the formation of the Abadi government, the replacement of the much more sectarian and divisive Maliki as Prime Minister, looks like a positive step, but it's still a long way to go. He's got to form a more inclusive government that involves Kurdish representation, and then they've got to reach a deal over these difficult issues, not just of oil exports, but about territory and about revenue sharing for the future. And I think that will be a process that takes many months. And until that happens, we're unlikely to see Kurdish exports rise significantly.
And just on the oil price, although the prompt price hasn't really seen sort of much reaction at all, the futures prices have. How does the market view sort of medium-term production, but also export growth from the Kurdistan and Iraq region more broadly? Because the best-case supply scenario, as we'll see in this chart here, is looking increasingly difficult to attain, isn't it?
Well, absolutely. I mean, this Iraq crisis has been interesting because it's been much more of a medium and long-term story. Prior to the launch of the Islamic State advance in June, the expectation from many parts of the market was that Iraq would deliver a huge amount of oil production growth over the next 5-10 years, and that would meet a lot of the global oil demand growth and make up for shortfalls or declines elsewhere. But now we're looking at, even if current production hasn't been affected, a lot more doubtful prospects in terms of the planned expansion of production in the south and even the production growth that the KRG is aiming for in the north. And if those two aren't looking certain, that's why we're seeing futures oil prices respond, because that's a major source of growth that's no longer guaranteed or no longer even likely to be delivered.
Thanks very much, Richard.
Thank you.